Hey, it's TaxQuips time from TaxMama.com. Today, TaxMama hears from Mazyar in the TaxQuips Forum with a good question. He says, I'm planning for 2012 taxes and I'm trying to figure out what would be the maximum long-term capital gain I can have in order to still have it taxed at 0%. I use the Schedule D Tax Worksheet and enter the required information. To make this as simple as possible, I assume there are no short-term gains or dividends and enter zero value for most of the lines. And you can see the post for the details of what he does enter. Consider the simplified scenario. I think the maximum $70,700 less taxable income, and that should match the value on the line 20 in the worksheet. Am I wrong? Well, Mazyar, that's a very good question. I'm glad you're doing your tax planning early enough in the year to take advantage of this low rate, especially since, after all, odds are when the 0% and 15% rates expire on 12/31/2012 this year, Congress will probably not extend it. So it is a good idea for folks to start cashing in on capital gains this year. Essentially, as long as your income, not including the capital gains, falls into the 15% tax bracket or below, your capital gains should be taxed at 0 for 2012. You don't say if you're single, married, or head of household, and that determines your tax bracket. However, you can look up the limits on the 15% rate right here at the SM Biz site. Of course, since you're looking at $70,700, I'm going to guess you're married, and that is the correct limit. You definitely have the right idea. Just to be sure, do test the computation in a live tax program. Other things might come into play like alternative minimum taxes, and there might be an effect on your adjusted gross income that could affect your itemized deductions, tax credits, and so forth. And remember, you can find answers to all kinds of questions about tax planning and other tax issues free. Where? Where else? At TaxMama.com.